Bang. Jared, he's clapperless, but for a good reason. John will be on Fox later on today with
I got a bunch of boxes of books behind me, Pete.
Yeah, way to go. He's got all the
followers all day.
He's got the Follow the Smart Money behind him. He's got Charles Payne coming up in a little while here. And if we can squeeze it in, we're going to give you a little bit of the Rebel's Edge, for crying out loud.
I got Guiding Light coming up right behind me. Welcome back to the Rebel's Edge for another week, a week that is partially January and partially February. We're glad you decided to join us. We always start off with a macro minute, and macro minute today, Pete, is dash for trash, because that's one of the things they're buying is trash today.
Oh, in abundance, John. I mean, when you look at the markets, you see the direction of the markets to the downside, but you see specific stocks that are absolutely trash. They're going to the upside. I'm going to give you one a little bit different. How about the 10-year? Now, we haven't talked about that in a while because it's kind of gotten lost in things or whatever, but the 10-year has pretty rapidly gone from 3.4 to 3.6. I realize that doesn't sound like a big deal to everybody, but it kind of is a big deal. Here's the thing. It is stalling a lot of those NASDAQ stocks, I think, and that's what we're seeing right now sort of play out. But it's a matter of where does the 10-year go from here? So if it stays above 3.6, starts approaching 3.8, I think the NASDAQ's in for a little bit of a whooping.
Very well could be, Pete. I saw the big comeback. Tesla had a big sell-off, $10, and then came back. So there's several stocks that fit into that category. And we're going to kick it off with one stock that opened high and went higher, and that was SOFI. But this one's a far cry from any of those lofty levels that it hit in the past, folks. But opened up 8%. Then went 10. Now it's up almost 14%. Single digit stock, of course. They actually put up numbers that were surprisingly good, at least versus what the street expected, Pete.
I think you qualified that very well when you got to that point, John, because that's exactly right. Rather than losing 9 cents, they only lost 5 cents. Now, this is a company that's been out there for a long period of time. They've now been out in the public for a long period of time. They got their name on a stadium in LA, and yet you kind of scratch your head and go, hey, at some point, don't you got to make money? I know I bring up that point all the time, but I do that because it's important, right? I mean, when you buy a company or buy shares in a company, you want to have a company that got a proven track record of making money at some point in time. These guys still got a bit of a cash burn. They've got a large short interest as well. I don't know, John. I am not in love with this stock, and I can tell you this. It's having a great day today. That's great. It's up like 16%. It got all the way up towards 7, but that's actually coming off the low end of where it was when you look at the 52-week range. So I'm not quite impressed yet, but it does show signs that things are getting a little bit better.
Yep. And it's part of the dash for trash,
yes.
Which includes, by the way, Carvana, because, this is a company, of course, that sells primarily used cars. And they'll drive it right up, just like Vroom, pick up your old car and give you a used one of theirs. And they had vending machines and all the rest of it that were just kind of more for show than anything else. But it opened at $8.35 today, Pete, and then zoomed considerably up like 27%. Last week, JMP reiterated them with an outperform, moved the target up. Actually not. They moved the target down from 25 to 15, but still, it's just shy of 10 right now.
Yeah. It's on a hell of a run. I got to tell you something. It ain't going to last. These guys are trash. You brought up trash earlier. I'll tell you what trash is, John. Trash is when you've got $7 billion in debt. Your cash burn is $1.5 billion. And you were a $21 billion company that's now trading about $1 billion. So I got to tell you something. I think this is trash. I think it's getting a squeeze. And you know what really makes me think so? 90% of the float is short. This is the classic short squeeze, and it's absolutely brutal. But I put these guys, John, in the category of, well, maybe like a Bed Bath and Beyond, and it makes a lot of sense. So I don't think this is one that you want to chase. Great company to some degree, not anymore. And unfortunately, they are not a company that I would be running after.
I agree. I mean, this is one that we've both made fun of time and time again. Good for them that they're getting a short squeeze, but doubtful that it holds for very long.
Right.
All right, let's talk about Colgate, Pete. They came out and said organic sales growth was above their targeted range. This is one that's a perennial dividend play, meaning that people buy it, and Pete says it all the time. You do not buy a stock for the dividend. You certainly sell it if they cut the dividend 99% of the time. But this one has 60 years in a row, Pete, of them increasing the dividend. Mm-hmm. It's about 2.6, 2.7% now. But does it get you excited at all, Pete?
I'm not very excited about it, John. It's an interesting company for sure. It's trading at a decent valuation. They did say something that caught my attention: sales growth across all divisions. And so that's pretty impressive. But you know what? When we talk about that dividend, John, how about when I tell you it ain't like it's 5 or 6%. It's a little over 2% on the dividend yield. So yes, they've raised it. Yes, they're a part of that. They're sharing the cash, and that's great. I do like the company, but I tell you what, it is not exciting. So you better know what you're getting when you get a name like this. It's going to deliver. It seems to be pretty steady right now. It's been pretty steady for a while. They're doing a lot of the right things, but probably not a name for me. It's a little bit too conservative. I'd say very conservative.
Yep, I'm right there with you, Pete. But here's the opposite. A company that is anything but conservative. They spent $10 billion with a B on the metaverse, and in fact changed their name to Meta. They're cutting contracts with basically gaming companies. And you and I talked about this, Pete. We said, instead of spending $10 billion to build a metaverse, why not buy somebody that has done it? Right. Because there are a lot of them out there, and you could spend a lot less than $10 billion on it. And these guys all have bigger metaverses than Meta does. So I think they're finally warming to the idea that you and I put out there, Pete. We have Bernstein raising them to outperform, and actually moved the price target up by $35 from 135 to 170.
You know, it's a company, John, that over time has become a very a solid company with great free cash flow, unbelievable numbers there. What you look at when you look at their balance sheet, it looks strong as well. They have great position of cash versus debt, close to $20 billion. So they've got all the right, features that you're looking for. But to your point, they were burning cash. They were absolutely just burning it up. They didn't need to do that. There are better ways. And they finally are doing the right thing, John, by expanding, cutting back on certain areas. But one thing that everybody will be looking for Thursday, what are they spending? What level of spend do they have will be the biggest question, I think, out there. And when that answer comes, we're going to see that stock move one direction or the other. But if they're spending anything close to what they did in the past, look for that stock to drop.
He's exactly right, folks. If they cut CapEx, I think this one goes boom. And if they don't, Pete, it's going to go zoom like that. All right. I got Blackberry, Pete, BB, for my unusual option activity today. BB, Blackberry. We've seen this one a few times. Several of those times it has worked very well. It's a cheap stock. It basically is trading $4.22 this morning. It's about 3 cents above that right now. They bought almost 20,000 of the March 5 calls. So these are calls out there into the future, 2 full months. So I like that. You have time to be right with it. And they have earnings that are due at the end of March. So this is not an earnings play for Blackberry, because if it was, they'd have picked perhaps April options and not March, Pete.
I love this one as well, John. I jumped on this the second we saw it with unusual option activity on the elite site of our company, Market Rebellion. I thought it was a phenomenal opportunity. And the reason I say so is very minimal risk with a heck of a lot of upside potential out of this one. We've seen some runs in the past. A lot of people would say, I didn't know Blackberry was still around. Well, they are. And I think that they've got a shot to make a pretty decent run. I've got Lucid for you, John. Now, we've talked about Tesla. We've talked about the EV space itself. Lucid's an interesting one because it's had a heck of a run. It's actually outpaced so far this year Tesla. It's up 77% year to date. Tesla's up 44% year to date. So it's a name that's been on the run. It was 640. It got up above 12 today. It got all the way to 13, eased back a little bit. We had a buyer of 5,000 of Friday, February 3rd. That's Friday. That expiration cycle of the 12 and a half. So stock was right around 12. They're buying the 12 and a half. It's not a huge move. They paid about $1.20 to $1.50. I did my best to be patient. I waited. I got this a little bit less expensive than what they paid for it, John. Now, the key is the stock's going to have to move to the upside for this to pay off. We'll see if it does, but I like what we're seeing here. And I do think that there's room for a little bit of a squeeze here as well to start moving to the upside and maybe break through that 13 area.
All right. Well, I forgot to ask you, Jared, are we going to do the Venture Minute now or after the sports?
Yeah. Let's do it.
We're going to do it now. The Venture Minute. So, folks, take a look at this. This is VeriJet. If you follow me on Twitter or Instagram, the Dr. J, you probably saw some videos of us flying in this jet. It is made up in Duluth, Minnesota, Pete. Cirrus Aviation. They've been making airplanes for better than 30 years up there. A lot of course, prop airplanes. And the reason they've got that hump on the roof, Pete, is that they have a parachute embedded in there. So from a safety standpoint, one of the safest airplanes ever to fly. It's also just got one jet. It's the same jet that sits on top of a cruise missile, Pete. Much similar configuration to where it sits on this, right between that tail that you always see when you see a cruise missile or even some Predator drones and things like that, because not every Predator is prop driven. And they also have a button, Pete, that's full of artificial intelligence. When you hit it, if the pilot became disabled and the airplane's still airworthy, like I say, you don't need the parachute. You could just hit this button and it'll take you to the fastest, closest, safe airport. I mean, that says it all. Half the burn of a regular jet because it's got one jet instead of two. And it's just a fabulous business, I think. These guys run charter business where you pay zero down and you just pay for your hours. So VeriJet, check them out, folks. That's part of today's Venture Minute. All right, now let's hit Roger Goodell, Pete, somebody that we both like to use as a punching bag.
And we're not the only ones, but I'm going to put this out there, John, and I think a lot of people now are understanding why. This is something we've talked about this in the past, and we're going to talk about it now because of what happened this past weekend. Roger Goodell needs to have the integrity that the NFL has always had. People look up to the NFL. They respect the shield. They love everything about it. Well, there's some stuff that they don't love about it, and I'm going to point it out right now. This weekend, anybody who watched that game with the 49ers and Philadelphia, here's what my big complaint is, John. So there's 53 men that are on a roster for the NFL for each team. But before the game kicks off, there's a number, 6 or 7. Don't worry about the variables there. Well, let's call it 6 players then become inactive. The rest of those then all of a sudden now that gives you 47 players to play a game. Well, here's the problem. Most teams don't like having to waste the time to suit up a third string quarterback. And they don't want to do it because the likelihood of having to use that third string quarterback is very, very close to zero. Well, you watch this game this weekend. It was a 7-7 football game. Purdue gets hurt. He's out. You get Johnson in there, but he gets hurt. Now what do? Those are the only two quarterbacks they had out there in uniform, John. And that's in lies where the problem is. Roger Goodell's got to step up to the plate and say, you know what? Why do we even do it the way we do? Let's have 53 men suited and ready to play in the game. And at least, and you must mandate 3 quarterbacks. They've got to have 3 quarterbacks that are in the full football uniform and prepared to play. And until they do that, John, it's a joke, because we've seen it happen more than once this year. The Jets had an issue like this. Other teams have had issues. It's going to continue to happen. And I'll tell you what, I think it drops the integrity of the league. They had to force Purdue back in there. Now, let me ask you this one, John. I don't know that it would happen, but if he got injured more than he did because of going back in there, even though he doesn't throw the ball, does he have some sort of interest in maybe going at the NFL? He sure could, because these guys put a guy out there, and everybody was crying about Tua earlier in the year. Well, how about Purdy? Did he really belong on the football field? My answer would be absolutely not. And yet they threw him out there anyway. So I'm frustrated with Goodell once again. I think the world should be frustrated by this guy, because he is tarnishing the shield of the NFL.
Well, short and sweet, Pete. I'm going to remind people that our father, who is a transplant surgeon, was also an arbitrator, a medical arbitrator. So when players, like for instance, that Pete discussed, whether it's Purdy or anybody else, says, hey, I had a significant injury, our dad was one of the guys who used to decide how much money, if any, was that player due. And I got to think you're exactly right, Pete. From a fan standpoint, you need 3 quarterbacks because of the injuries. And from a like you say, credibility standpoint, if you have somebody who's just going to hand off the ball, even though you've got Christian McCaffrey and so forth, when they're stacking the line like that, nothing's going to happen. And that was a horrible second half for that reason. All right. What about Zach Edey, Pete? Tell us about this.
Who is Zach Edey? I asked that question because I would say the majority of the country has no freaking clue who this guy is, but they should. And here's why, John. This guy is 7'4", arguably could be 7'5", weighs 305 pounds. He is the center for Purdue, which is the number 1 team in the land right now, NCAA. Number 1 basketball team is Purdue, and they got an unbelievable record. I believe it's 21-1. They did have 1 loss. They had a loss to Rutgers, who at the time was on a great roll, and they took them out. But they are still everybody's choice for number 1. He's everybody's choice for the National Player of the Year, John. And the kid has been there a couple of years. He comes from Canada, of all places. The guy used to play hockey until they couldn't find big enough skates for him, and they couldn't give him a uniform. And he decided, you know what? I got to move. I got to play a different sport. He's getting bigger and bigger by the second. They put him on the basketball court. He's got great feet. He's got great hands. He's got an unbelievable sky hook, which you and I remember, but a lot of people watching, if you're under the age of 40, you don't even know what a sky hook is. You can't block it because you're shooting down at the basket. So the kid does that. He's absolutely a beast, John, and he's a lot of fun to watch. I don't know if you've seen any Purdue games this year. I've seen a couple. He swept Michigan State and Michigan alone. I mean, they have other great players on the team, don't get me wrong, but they absolutely slaughtered those 2 this weekend and took it to them to the point where it was embarrassing. Matter of fact, the head coach at Michigan State was walking around scratching his head going, I don't know what the hell to do with this guy. But if you had a chance to see him, and if not, John, I recommend you got to watch Purdue play basketball.
I look forward to it, Pete. Well, I'm also looking forward to going on with Charles Payne, 2:15 Eastern time today. So I got to go from here, more or less South Beach, Pete, over to Brickell, and then head for the Jet. So thanks for joining us today, folks. I hope you tune in with Charles Payne, the man, making money with Charles Payne. We're going to talk about that Tesla trade. We're going to give you another earnings play for this week and maybe talk a little bit about what the Fed might be doing, Pete. Thank you for joining us today, folks. We'll see you tomorrow, 1 p.m. Eastern on the Rebel's Edge.